the problem that they're very, very sure about their revenue going hockey stick. But you will learn a lot about the founder if you call them up and question them. How do they react? How do they respond? How do they reason?
Welcome back to the channel. We are now presenting the second masterclass of how to become an angel investor here at Business Law Toolbox. And we have Kat with us, our business lawyer here as usual, and she's going to take us through a really crucial thing when you're new to the angel investing. So stick around because this is going to be very, very important to know if you're about to be an angel investor. And for me, as I mentioned in the first episode, I had 2 million from the real estate that I got in profit. And now I want to start angel investing.
Yeah.
But it's a lot of things to think about. And now when I'm do the research, I mean, there's a lot of documents you need to get it right.
Indeed.
Because I'm a bit insecure to start in this world. It's new to me. I don't know how to act, what it is, or anything. So, but I'm very curious.
Yeah.
That's why I'm doing a lot of research. So I've seen a lot of different documents that you might need, and Kat's going to explain it to us today.
Indeed.
So the first thing that I got over was pitch deck.
Yeah.
What is it?
Well, basically, that's a selling presentation of the company, of the startup. So the pitch is what you send over to angel investors. It shows the core business idea, the market opportunity, the team, everything that's really relevant. Some kind of financial prognosis, where you think you're heading, etc. Typically like 12 pages. Some go for like 40, but typically shorter, better.
And it's something that all of the companies send out to the investors?
Yeah.
Okay, good. So like a presentation, as you said.
Exactly.
Good to know. And then the second one was executive summary or business plan.
That is a short form of presentation of the business plan. So kind of a summary, like a 2-pager. So that you should expect to be able to get from the founders. And please, if you're an early angel investor, don't expect it to be 200 pages long, but do expect to get one, like a 2-pager from the founders.
Okay, that's really good. And then I have the third one, which is the financial statements and projections.
Yep. And that is also something you should ask for before you do your investment. And that will be the budget, really. Both currently and forward-looking. If they take in, say, 2 million. So, the financial statements, that will be both current and forward-looking, like a budget. What do they expect to have in costs and what do they expect to have in revenues, etc. So like a financial statement, but also prognosis. And what you should know about the prognosis part is that very, very typically it's too positive.
Okay, and what do you mean by that?
Too much revenue too early and too little costs.
Okay.
So do scrutinize it. Do you believe that it makes sense? Do you believe that the money you put in will last as long as they predict, etc.?
And if I do not believe them, what do I do then?
Question it. Because again, a founder should be positive. So maybe it's not the problem that they're very, very sure about their revenue going hockey stick. But you will learn a lot about the founder if you call them up and question them. How do they react? How do they respond? How do they reason? So that can be a really good telltale.
Oh, wow, to get to know them a bit. And then one more thing is the due diligence checklist.
Yeah. So the diligence we talked about, that's the investigation of the company. And for you, at this early stage, you should have some fundamental checklists. You want to see specific documents about the company. You want to get some verification if they make claims about intellectual property, etc. So a checklist will be something that you need to have confirmed or checked before you do your investment, so you know that it's a sound investment to make.
That's good to know. And the next one is the intellectual property. And we talked about it before. But as a document, what can I expect?
And that will depend on the type and both where in the process are they. Is it something within pharma or health, or do they claim that they have a patent? Then you want to see the registration, right? Or is it something that's proprietary for them? You want to know. So you want some kind of validation, and what that documentation is depends on the claims that the startup makes. And perhaps there is none. Perhaps it's just a great ambition, but then that should affect the valuation negatively, or it makes it so that you might not feel that you want to invest at this stage.
So it could be very crucial.
Yeah.
Okay.
It's a minefield, the IP.
The IP.
Yeah.
Remember that.
Yeah.
So we're heading out to...
Document?
Yes, the documents. The articles of association.
That you will want to ask for from day one. I know many of you don't, but me being a lawyer, I'm going to say it. That's the core fundamental document about the company. And really, you want to know that it's properly incorporated. You want to know what type of shares and how many are issued and how many are authorized they can issue. What's the share capital? What's the board compilation? How many? Do they have an accountant? Etc. So that's kind of the core document of the company. And the company, that's where you're putting your money in. So kind of the receipt.
The receipt. Okay, but this is a good one.
Yeah.
And then also the cap table. We talked about it. We have 2 episodes of it.
2.
A must see. It's a really good one. But tell us a bit more about it.
It's the mecca.
Yeah.
It's the ownership of the company. It's the structure, and typically it should both show the current ownership of the company. It should also show the fully diluted ownership of the company, informing you if they have any promises for future equity outstanding. And also, it should include future funding rounds. So not only the current state, if they're planning a new funding round, it should say pro forma, and you should see what happens to the ownership at that funding round. So it's a bit of the mecca. I mean, it is an investment, right? This is the tracking of your ownership and your return of investment in the future.
And you can also see like historic data, which people have been invested before and such things.
Yeah, I would say yes, the cap table should also help you discern what has happened before. It should be layered in that sense.
Good. I learned that the cap table is very important.
Yeah.
So, and the shareholders agreement as well. We have an episode about that one too, but never mentioned too many times.
No, if you enter into as the first investor, it might even be the case that they don't have one yet.
Oh.
It might be the case if you're talking to a first-time founder and you're the first investor that he or she is talking to, that they haven't put that yet because they're the only owner of the company. But as soon as you have an investor on board, you need to have it because it governs control rights and economic rights. What happens in the future when you bring in new investments? Should you be allowed to participate again or not? The governance right, who can appoint a board of directors, who has reserved matters, can say yes or no to specific type of actions. So it's key.
Is this like mandatory for companies to have?
It isn't.
It is
So
not.
like I mentioned, if it's a one owner, one founder, he or she might not even have one today. So you might need to help out to bring it together. And there are great varieties in the shareholders agreement. So don't think you can just download one and it will be standard boilerplate, sign it. I do warmly recommend that you read it and you get legal help before you sign it.
Yeah, that's a good one.
Yeah.
And convertible note or safe.
It can be the case that the founder that you are talking to wants to offer you a safe instead of equity shares directly. That means that you instead invest with a promise for future equity. And convertible also is a loan today that can convert into equity in the future. So if that is the case, and that's typically when you cannot set a good valuation today, and in the US, a safe, simple agreement for future equity is very common, then you should need to know what are the terms for conversion. Is there any discount? Is there any cap on the valuation? Do you always have a right to convert? Do you have any right to interest if you don't convert, etc.? So read carefully if that is the offer that you get.
Okay. And then the share register.
The share register, once you have invested, that will be the proof of ownership. So, I mean, it's like if you buy gold, you want a certificate knowing that it's gold, right? That you own. You want to know you own the shares. So make sure to ask for a copy of it so you know that you've been inserted properly. Because many first-time or stressed founders might not even think it through. And I mean, I've seen all of chaos.
I can imagine. You're so happy, you can invest and do funny things, and then you forget about some things.
Yeah. So ask for a copy. And before, it was typical that you got a physical share certificate. But now in the modern days, most countries, you don't need to anymore. So it will be that digital share register. And that, when you're in that, you have the economic rights of your shares and the governance, the control rights. But you need to be, so you can participate in general meetings, get your dividends, etc.
Okay, so make sure to have one.
Indeed.
So we're gonna keep through.
Very dramatic.
It's very dramatic here. It's a lot of things. So, and then we're heading over to the term sheet.
Term sheet.
Yes.
I would say if you're early angel investor, most likely you will not have a term sheet. That will come later on when we're talking about venture capital, bigger investments, bringing them on. So what you should know about the term sheets is typically non-binding, but they will describe the general terms of the next investment deal. The value of the company, what type of shares, do they get preference shares, so they prefer that at a liquidity event, what kind of control rights, will there be vesting requirements for the founders, etc. So it's very important. And for you as an angel investor, you will want to know if you have to participate in like warranties, etc. And we'll get to that when we come to the investment agreement.
Yes, which is the next one.
Yes. So that's the formal long-form document that the term sheet reflected. And that will describe the new investor coming in and on what deal terms. So like I said, early angel investor, typically you don't have it. But bigger VC, you can also incorporate it in a new shareholders agreement. You can call it a subscription agreement. You can call it investment agreement and the shareholders agreement. Basically, terms of the investment. And what I want to say as a red flag for you as an angel investor will be check if there are warranties that they want you to give. Because sometimes they will ask the current investors and owners to give warranties. And then I'm going to say it's fine for you to give fundamental warranties that you own the shares you have and that they're not pledged or anything like that. But if there are business warranties, then you, as a passive angel investor, should not accept them.
And why?
Because you're not close to the business. And you can be held liable for them, have to pay damages if something ends up not being true.
Okay, that's not good.
No. So that should be up to the founders. So check that you, as angel investor, are only part of the fundamental warranties. That's my recommendation.
And then we have subscription agreement.
That is actually part of, that's the same as the investment agreement
It
as
is?
I mentioned. Yes.
Okay.
Yeah. It's different type.
Valuation report.
Depending on the region and what type of startup, you can do a yearly valuation report, and that can have implications for eligible investors, tax implications, possibilities to issue certain types of employee stock options, etc. So be ready to have it if needed and have a dialogue with the founder if that is the case and what you use it for.
Good. That was all that I asked for. But it sounds like it's a lot of documents to think about.
Yeah.
I'm a bit stressed now when I'm starting the journey. But
Yeah.
what would you say to begin with? I mean, what should I start with if I'm early on in the...
Early on, of course, getting a pitch deck. I would say typically an executive summary, but that's up to you. You need the cap table. You need the share register. You need to know that the company is properly incorporated, so the articles of association. You need a shareholders agreement. And in case they make claims for intellectual property, I say you want to see validation of that.
Okay.
And of course, a financial prognosis. You want to make sure you feel that it's sound and that you believe. Because remember, they will be spending your money.
Yes. Don't forget that.
Don't forget that. No, really.
So what we're talking about is like to safeguard now. when you start your investment. But does everyone think about these documents when you're starting the journey?
Not at all. No. Because, I mean, so much adrenaline rush or just enthusiasm, I don't know. But it's easy to just jump in the game directly. And if you have the documentation, I mean, think about it like you're buying a house or something else. I mean, typically, then you're used to having a contract in front of you. It's the same. You need to regulate it. Otherwise, at least I would say it's that big risk of not seeing your money again, that just quadrupled. Yeah.
That's what we now want to do.
No, it's unnecessary chance that you will lose your monies.
So have the documents.
Yeah.
Wow, that's so good. I mean, I'm learning so much here, and I'm really, really excited to start my angel investment journey.
Love it.
And now you've been watching this second masterclass about how to become an angel investor, and we talked about what documents you could expect and also ask for when you're starting your investments.
Perfect.
Really, really important. And we hear this is not legal advice. It's only knowledge that we're sharing, tips and tricks that could be good for you in your business and in your career.
Tack för idag.
Tack för idag.
Hej då.
See you
Ses
next
nästa
time.
gång.